All right. Hey there. What's going on, everybody? Chris Franks with TexasWest Capital. Getting started here. And I apologize if you hear a little noise in the background. The long guys are just about done. But, man, it's like can't win for losing sometimes. So I do apologize for that. But, hey, we got Beards of Bitcoin here. I've got Andrew and Tillman waiting in the wings. Tillman is just aching to jump on here, man. He's got a prediction he's going to make. He promised he'd share it with you all. So if he doesn't, you're gonna have to hold that. You're gonna have to hold that against him. Before we jump on here, go ahead and do us a favor, guys. Hit the thumbs up, hit the follow, hit the like, leave a comment, all that great stuff. We love to hear from y'all. And so leading into this, today we're going to talk about Bitcoin's velocity and how it has kind of just sunk down to around 13-year lows amid all this institutional kind of drive and what do you call it? Just interest in Bitcoin, right there, accumulation. And so let me go ahead and bring up the guys here. There's Tillman, there's Andrew. How you guys doing?
Yo.
Hey. You know those memes on crypto Twitter that say there will be signs. Just because Bitcoin's at 100K today doesn't mean you have to have people mow your yard every day, okay? Just give it once a week, buddy. It doesn't, you don't need people out there just so you're feeling big shot. It's just cutting grass that's already been cut.
You know what? I would love if they would listen to me and just pick a different day. But apparently they do everybody over here on the same day. I don't get any special, any kind of special, privilege or anything. So just goes to show, guys, no matter how much money you have, somebody's going to say, hey, you know what, F you. Do whatever, it don't matter. And you just kind of deal with it, right?
Yeah. I have it on good authority that if you have any punchlines and jokes today to rip on Andrew, he's going to be a little slower to come back because he stayed up all night last night with a sick child. So as a true friend, I've been taking advantage of this all morning by coming up with very quick-witted ways to make fun of him to see if he's asleep or not.
Well, we wouldn't expect anything less, right? You guys have known each other how long?
It's, kicking a guy when he's down. It's expected at this point.
But that's what guys do, right? I don't think, and just a real quick kind of take a little detour here real quick. I don't think women will understand that, right? Women are so empowering to each other and so... so behind each other, whatever. Men are like, hey, listen, did you die? No, you didn't die. Well,
I find it empowering to know that other men know how hard life is, though.
Yeah.
So that's my empowerment. I know the feeling, so it's like, hey, welcome to the club. It's like getting initiated into a gang and them kicking the crap out of you. It's a sign of endearment at some level.
There you all have it. Andrew, Tillman believes that the whole bromanship thing is all about gang life. So he's probably throwing up North Colorado mountain gang signs.
West side.
Beards and Bitcoin.
See, guys, it's information and a show. I mean, you can't go wrong with us. You should be here every week, I tell you.
No.
Yeah, you hit me in my sweet spot. I mean, this is like, not too early, not too late in the day. I still have energy. It's good timing.
Yeah.
An hour later, we'd be just screwed, huh?
Yeah, pretty much. Yeah.
Well, this right here, guys, this is the Bitcoin velocity versus the U.S. money stock. The blue line down there is what do you call it here? Is Bitcoin's velocity. And so those of you that are tuning in, you understand what we're talking about here. Velocity is how many times does that same money, that same asset, whatever, turn hands, right? So, you have the same dollar. If I give it to Tillman, he gives it to Andrew, gives it to one of you guys out there, Mark, gives it to Fibo, gives it to Brian, whatever, that's increasing the velocity. And that means it's in use, right? When your velocity is dropping, that means people are holding. They aren't really out there doing it. And so what we're noticing here is we're noticing this big kind of move down here coming into right as we got into this real institutional adoption here. So 2024, we're seeing the move up. But man, oh man, look at how this has been. This was the low over here back in January of 2011. And here we are hitting, that lower low here right prior to 2024 coming in. And so just a lot of holding going on, a lot of that. And, it's what we talk about every week, guys, right? It's all this institutional adoption. It's all this stuff coming in. I know Andrew's got some big news about who is it? Goldman Sachs?
Yeah, Goldman Sachs. So it's you're the price action guy, Chris, and I've been saying it for a long time. Price action changed materially on January 11th of this year when the spot Bitcoin ETFs became a thing, and they've grown into an absolute behemoth. They're up to 110 billion in assets under management at this point, which is just absolutely nuts. But what does that engender? That engenders additional players coming into the field. So Goldman Sachs, there's been two moments over the past 5 days where Goldman Sachs has laid the groundwork to get even deeper into the space. One was they put out an institutional note to all of their institutional customers, and on the front page of that note, it was like I don't know how many pages it was. It's more than 10 pages. But on the first page of that note, it was highly focused on crypto. So Bitcoin and Ethereum and their ability to do transactions on behalf of institutional clients. So they talked about swaps. They talked about both ETF and NDF swaps. And the ability to, take one product and another and effectively arbitrage the difference in price there. They talked about the ability to give access to institutional clients, and they mentioned by name every single Bitcoin ETF and every single Ethereum ETF. So they're already talking about to their institutional clients, which of course presupposes that it'll trickle down ultimately to retail clients. Swap type products are effectively yield type products, so the precursor to yield type products, right? So Goldman Sachs is sending a note on a Saturday, by the way, to institutional clients, about this stuff. And then on top of that, David Solomon, their CEO, comes out and stakes a claim to, hey, we're happy. We're going to be happy to offer Bitcoin and Ethereum products if the regulators are okay with that. Well, of course, they already know what regulators are not okay with them. They have you can imagine how cozy their relationship is with their regulator. So that, in my estimation, that's a sign that the next, large, huge global bank that's going to be able to actually custody Bitcoin and Ethereum is going to be Goldman Sachs. So again, big shifts. By the way, when David Solomon came out and said that yesterday, there was a significant move in the price of Bitcoin, the spot price, and we've seen a continuation of that. As we're up, let's call it 6, almost 7% from yesterday's lows. And yesterday's lows, right? It's relative, 94 and a half or whatever, and now we're at almost 101. Just big differences in the way that things act and react versus the days of, what's the movement of Bitcoin on Binance overnight in China. We're in a whole different world now. So
Yeah.
Well, it seems like there's price stability coming in at an ever increasing rate, right? The fact that Goldman is announcing this is an obvious next step. In my opinion, they're right. They've been doing research for years, probably, and they've probably had this decided for a year. And it's just another head nod to the fact that they're creating, like Andrew said, liquidity pools. They want the big money to find yield. Big money has a hard time finding yield, a really hard time finding yield at scale, because management complexities typically come along with yield. And so if you can find markets that provide yield where your money is giving you yield at a consistent rate, that's what these products are designed to do. That's Goldman will be a Bitcoin bank. Every bank will end up being a Bitcoin bank. This is the inevitable fact that they want to hold the physical. and give us products off of that physical. And it's we've been talking about this for months. It's just continuation of it with probably one of the most branded household names in finance that exist.
Yeah, and Andrew's actually been mentioning that, really almost since we started the podcast here back at the beginning of the summer. Really about Goldman Sachs is going to be pulling in there. Is going to be one of the big ones, along with
Well, they got a taste. They got a taste of it as an authorized participant initially and they begged BlackRock to do that initially on the BlackRock IBIT, Bitcoin ETF, and so they're on the back end seeing the scale of this thing flow through their pipes and levers as an authorized participant is simply the one exchanging one asset to another. So the actual spot Bitcoin to cash create, they're facilitating those particular transactions, and they're not dumb enough to realize, holy smokes, there's not a whole lot of cash creating happening around here. People are buying this stuff and holding on to it, and they're doing it in real size. So how are we going to get to the size portion of the ledger here, and how are we going to make more money? BlackRock's making a fortune on this stuff. How do we position ourselves? And so again, the double-fisted version of institutional note that goes out talking about swaps, and then the CEO saying, yeah, we're happy to be more involved with Bitcoin and Ethereum if regulators are cool with it. There couldn't be I would say, you can get into technicals, you can talk about movements of, size and tokens and all that stuff. I would say that those two pieces of news have been a big part of the push back above 100K here this week.
I think the more telling part of the story is the fact nobody's talking about it, and that memo that they sent out, I think it has some secret sauce to them in it. I don't think it's real secret sauce, but to them, I think that they don't want that memo in the hands of their competitors, because it does specifically address how they're going to serve their highest end customers. And that it's not really a threat to their business model because of the dominant force of the market, but it is precedence. It's standard best practice. It's showing the toolbox in its entirety at a level that, if I saw this plastered all over the news, it actually wouldn't ring as true to me as the fact that this thing has gone out. This memo's in the hands of God knows how many very large Bitcoin buyers, and really no press has covered it in any great significance. That actually takes money too. It takes money to buy press, and it takes money to suppress press. They like to make it on both sides. But so I think that it's great to see. It's great to see them taking it so seriously, is I guess my point. They really want to take a great piece of this market, and they have the tools, and they have the liquidity pools, and they have all the partnerships that are really, they can just tap in with basically raising their hand. So to Andrew's point, I think they probably are a pretty good driving factor to the pop that we've seen. And it's only, we've been saying this every day on the show that we do it. It's like the overwhelming amount of news that's coming out is not just good news, but it's like, if we would wait for one of these pieces of news for an entire cycle in the previous bull run. If one bank in 2017 had come out and said, you know what, we think we're going to do a Bitcoin ETF, and we're going to custodian Bitcoin, and we're going to do an options product, and we're going to, we would have all been like, that would have been the news of the entire bull run. And now it's like every day a new bank's joining, and oh, by the way, we just had Goldman Sachs join the party. Like the the coup de grace of the naysayers. They don't have to do anything, guys. They don't like this is the only reason why they're wanting to dabble in this space is because we've gotten it big enough to make it worthwhile for them to dabble in, and that's really the incentives there.
Yeah, and I mean that was again something we discussed. I mean, my God, guys, if you are just now tuning in, you missed the previous 25 episodes of what we've done here. You're going to see we've been talking about it. Again, nothing that we've kind of said along the way here hasn't not happened yet, right? Now that doesn't mean we're going to be perfectly correct on everything, obviously, but the big overarching theme I think is this idea that you still have people out there who are saying, boo, boo to Bitcoin and it's going to die and it's the end and y'all are suckers. And these are the same people who have been saying it for 5 years, 10 years. It's absolutely, you have to understand.
Is there a non-zero chance that they're right? Yes.
Yeah. But are you gonna bet on that non-zero chance?
That's a capitalist question. Every man has to live and die on that sword, and that's your own decision. But if they want me to acknowledge that there's a non-zero chance that that Larry Fink's wrong and we're all stupid for following him, then I'll admit there is a non-zero chance. Yeah. But if you're going to the horse race and you're looking at the handicap odds, I think it's as good as bet as any horse that's on the track. Like
better than most.
Well, and here's my point. Why wouldn't you want a little bit of it? Why would so the thing that I don't understand, and you have to ask yourself whether they're honestly even real people and whether they've just are trolls for the sake of being trolls. But I don't understand how Peter Schiff can say don't own some. You know what I mean? Like
something, yeah.
If you can't get to a place where you're acknowledging that you probably, if you're not living paycheck to paycheck and have a lot of credit card debt, and if you have any savings, and if you're able to save any money, I don't understand any logical person that would say that you shouldn't own some of Bitcoin. And so anybody who has that stance, I just fundamentally at the core of my being have to question their motives, right? It just doesn't make sense to me that you would come with such a hard nose no when there's no real explanation behind it. There's no facts.
Well, did y'all happen to see Financial Times recently?
No.
Yeah, and you saw, right? Yeah, they're out there. Basically, what they said is, "Hey, listen, guys, if you didn't buy Bitcoin because of what we were, our stories and whatever, sorry,
but we still hate it. We still hate it.
Right? Yeah, I mean,
and by the way,
but here's the thing, guys. They hate it because of the same reason Warren Buffett hates it. And Charlie Munger hated it. Why? It's a non-yield producing asset. Well, what happens when that changes? So let's just give it 6 months. And then when banks start letting you borrow money at a disproportionate rate to the collateral that you once had to put up for the loan, and now Bitcoin being the collateral, just wait until that moment happens and then come back to me and let's talk about whether it's a non-yield producing asset anymore.
It is just it's people that are publicly still anti-Bitcoin, right? And think they have some angle that's somehow associated with the, tether or something stupid like that.
Yeah.
They're just all I ever have to do if I decide to engage with those folks on X and Twitter is just post one of my 7 pictures of Larry Fink. You're like, okay, please explain to me why you, anonymous Elmo avatar X person, are right, and the Superman of the world of finance is wrong. I just give me the argument. I'm willing to listen. But I'm just going to watch you crumble I'm going to watch you crumble inside of yourself. There's a Silicon Valley reference that's probably too much for the podcast. but I'm going to watch you crawl inside of yourself and look really stupid trying to do it. Like, you just can't make the meaningful argument. So 60 Minutes had a spot, and their spot was, crypto bought the election, and, it's bad. They had Ripple on there. I don't want to cover the Ripple part. They had John Reed Stark on there, who I don't know personally, and I'm sure may be a decent human being and maybe a good friend and a father and all those things. But he's an absolute grifting idiot when it comes to understanding and talking about Bitcoin. He claims to be he's an SEC guy, and he was a lieutenant in the SEC, but that was 20 years ago. That's the last time he worked at the SEC. And crypto/Bitcoin wasn't invented yet. It didn't exist while he was at the SEC. So all of his claims and the fact that they had him on there, it's just embarrassing at this point. Like, you look at whatever pieces, whether it's 60 Minutes, we go back to the truth of Elon Musk, and we're the media now, right? Like, you can make the claim, whether it's your shows, Chris, whether it's other shows that we're aware of, or even we're on, the scale of that audience over time is nearly as big. And this is not crazy, by the way. It begins to approach the nightly audience of 18 to 54-year-olds on MSNBC and CNN. That's not an untruth, by the way. There's 40,000 to 25,000 of those people that are watching those shows on a nightly basis. So, 60 Minutes did a piece, and it was terrible, and it was just, it's all arguments from basically 2017.
Yeah.
And we're no longer there, man. We're just no longer there.
There's so much, though. Like, I don't agree with, calling anybody an idiot, because I'm an idiot on a lot of spectrums. But I will say that, everybody has the information that they have about Bitcoin. And to the degree that they're truthful with that information, they have an opinion. Bitcoin and blockchain are extremely complicated. They're extremely disruptive. They've taken the world over by force. So they're a mathematical force of nature that can't be bottled up. And you've seen that because they would have if they could. So Bitcoin is like, it's something that's an innovative technology like electricity. It just births so much more innovation, and it's so powerful at the core of what it is. It's hard to ignore. But just like electricity, it's regulated, distributed from central forces, taxed, controlled. Like, those attributes have to go hand in hand with the financial system. And again, it's hard, but Bitcoin has an identity, and it's Wall Street, and that is the identity, and we need to claim the identity. We need to innovate on that identity. That's what the world's going to adopt, whether the Bitcoin maxis like it or not. That's what's here to stay, and that's the only path forward that gets us to the summit. Period. The end. And so, when you look at naysayers, they can be naysayers at this point in the journey. They can even say that it is a false hope, like that it's an altruistic viewpoint as it pertains to the true nature. Like, if you listen to 5 different Bitcoiners, I walk away from going like, yeah, okay, don't no, that ain't happening. You know what I'm saying? Like, so it doesn't surprise me that there's a huge spectrum of opinions, both dissenting and confirming, as it pertains to the future of Bitcoin. Here's the good news. Time has told, and time will continue to tell the story. And not a single opinion really matters, because as long as there's miners plugged into the wall and blockchain processing power going into the computations and distributing and both and handling the transactions, then at a decentralized level, the decision has been made. And so it's going to keep chugging along at the rate by which adoption and innovation and product development and all of the things that drive markets are coming online. And if you take that pulse, they're coming online at an exponential rate. So to Andrew's point, I don't understand how someone looks at the velocity of adoption of Bitcoin inside of the banking sector and inside of Wall Street and walk away from that going, you know what, probably a fad. But to each his own, like that's, it goes back to what Michael Saylor said about Microsoft. Everyone deserves the price of Bitcoin that they deserve.
Yep.
And that's,
Yeah, because as you're referencing there, of course, those who hadn't heard yet, which I believe probably everybody listening has heard, Microsoft, they voted against, bringing in Bitcoin there to the, they voted against to look at bringing Bitcoin in. I mean, so effectively they voted against bringing Bitcoin in, but it's in for now, right? The odds that Microsoft continues to hold that same position a year from now, when they start seeing other big companies coming in and doing that, I think is very low. We have Amazon shareholders now that are petitioning to have the same kind of vote with Amazon, look into, for Amazon board to look into, holding Bitcoin in their treasury. And so this is where Tillman's, he couldn't wait to share this with you guys. He was dying to share this with you guys. He's got a prediction on this. And so I'm going to go ahead and let him give us that prediction.
Chris, that's such a setup. All I said pre-show in the waiting room was that I'm happy to see Microsoft publicly do that, because again, everybody has to live with the decisions, and the more public the decision is, the more public time gets to determine what your punishment or reward is. Like that's the nature of business. And my prediction is this: there are a lot of companies out there that have been looking at Bitcoin on the sidelines, wondering if they should do the same as all the other companies that are now adding it to their balance sheet. I think that a negative announcement attached to Microsoft rejecting it is going to draw 2 or 3 larger companies, not larger than Microsoft, but larger than we're used to, into announcing that they are adding Bitcoin to their balance sheet. I just think the natural void of life, when somebody says something really negative, if there's any positive people out there to come to the defense, there typically is a response. And if I had to bet, there's probably more positive responses than negative responses. If you went out and Michael Saylor pitched that to 100 companies, I don't know what the outcome would be, but my instinct would tell me 51 plus would be yeses. That's my instinct. And so, let's just let time tell its tale. But I don't see how Microsoft saying, giving a rejection doesn't entice a couple of big boys to come in and say, we want to be a part of this. We were going to add it to our sheet.
Yeah, and so again, now you bring up MicroStrategy. The big news with them is it looks like they're probably going to be joining the ranks of the NASDAQ coming up here. And that their value really is just derived from their Bitcoin holding. It's not actually from their original business model, which is kind of interesting. But here's the thing, though, guys. Guess what? Andrew's talked about this so many times before. Such a great swath of the public owns NASDAQ, right?
Yeah.
So what does that mean? Well, if MicroStrategy is, they rebalance and MicroStrategy is pulled in there with the NASDAQ, guess what, folks? If you're holding NASDAQ, you're now exposed to Bitcoin. You have Bitcoin exposure, whether you know it, like it, want it or not. And that gets really interesting, I think.
I would guarantee that your exposure is going to be ever increasing with every year that passes, because more companies inside the NASDAQ are going to do this. And the deeper the dip, the bigger the bet. We're past the point of people not being able to see the vision, in my opinion. Everybody now sees what's happening. If you're a sophisticated investor of any kind, you've begged the question, how is MicroStrategies doing this? And it's led you to this infinity loop that they've essentially created. And it's economic driver, and the headwinds have gone and the tailwinds are in place. And it has, if Bitcoin's price continues to go up, more and more adoption, more and more press, more and more everything. And with the rising tide floating all ships of people adding it to their retirement plans instead of, like Andrew said, a bunch of, crypto traders in the overnight sessions dumping and buying, those days are gone. And it's great to see. It's like we're finally at a legitimate place in the world.
So just in the last 4 weeks on this show, here are some points of emphasis associated with, global institutions and then pop culture references associated with Bitcoin. One, about 4 weeks ago, AllianceBernstein, one of the biggest institutional players on the map, and their research department put out one of their black books. And the headline of the black book was, "Stop asking questions, just buy everything." Okay. That was the headline from their black book. By the way, if you go to AllianceBernstein's, just their website, you just scroll down a little bit, there's a huge section about their black books, which is a big, that's a big branding thing for them. Those black books matter on Wall Street.
Yeah.
Next, you have Donald Trump talking about, hey, congratulations on 100K Bitcoin for all the Bitcoiners. You're welcome. Okay. So that guy is watching the price of Bitcoin on a daily basis, right? Yeah. Then we have Goldman Sachs and talking about their involvement in Bitcoin and Ethereum, talking about institutional ways that they can manage yield-bearing returns using the current. They also mentioned not only the ETFs, not only NDFs, but also options associated with the Bitcoin ETFs. And now they're
talking about reduced interest rates on loans if you collateralize portions of the loan with Bitcoin. I saw that on the news, and they were talking about it for REITs. Think about that. I mean, that's a scale that we haven't talked about. But if you get into REITs and you inject Bitcoin as a stabilizer of value inside of a piece of real estate against seasonal fluctuations in cash flow, holy smokes, you're done. Like, just think about it. Like, if you just take Bitcoin's average yield in price increase over the last 15 years being 40%, you attach a 40% bump to the cash creation value of a piece of real estate on top of the rent roll, and come on, man, it'll be the most attractive REIT that's ever been done. And those types of products are, they're not just being conceptualized in the dungeons of crypto Twitter. They're being talked about on national television by the captains of industry. So it's I don't see how this thing slows down anytime soon. The only thing I'm
Oh, I forgot one in the last 4 weeks, and that one was, Larry Fink associating and connecting the Bitcoin scale of the ecosystem at some point being associated with the mortgage business here in the United States. Again, so you have all these set of claims coming out week after week after week after week after week, and it's all associated with the flow of capital into Bitcoin, the flow of capital into the ETFs, the flow of capital into the asset class. And oh, by the way, Ethereum flows have picked up.
But they did the fourth largest ETF now this year, and they started in this summer. We all remember that really abysmal.
Yeah, they started in like July, and they got their butt kicked for 2.5-3 months.
Yeah.
There were negative flows for the first 90 days. And then, boom, you have the election, you have some stuff removed. And so institutions are like, well, Ethereum's not going anywhere. Let's shovel some money in there.
Yep.
I was just going to finish when I got cut off. I'm a risk guy, so I always take the worst case scenario, the non-zero event case. And, headline, all positive things. If you really look at any of the headlines that have come out in the last 6 months, a year, that even hold a candle of even perceived threat to where Bitcoin's going, it's this new quantum computer that they've got.
Willow,
But
right?
yeah, Willow. But even that, if you understand Bitcoin as a liquidity pool and not a protocol anymore, they can move the liquidity pool onto a new protocol and it stills Bitcoin is the point. So even that, I see it as a temporary disruption where a lot of knee-jerk reactions happen, but I don't see it as a real threat to the longevity of Bitcoin. So the question becomes like, what can kill Bitcoin at this point? What can kill Bitcoin? And I'd love to have people's opinion about that. I don't see anything that can kill it because I see what they've created as being similar to what every other market looks like, and there's no there's nothing. Silver can go down a lot, but silver's not going to ever be removed from the markets. Any of these can, there can be large fluctuations, but the market makers stay the same once they've adopted the product. The product's in their stable and they own it, and it's now a part of their stable forever. So
there's not a concern about what can kill Bitcoin. It's akin to the all the climate change, everything, set your hair on fire because the ice caps are melting and Florida's going to go away in the next 10 years. Well, if that was the case, then the real estate associated, beachside real estate wouldn't continue to go up in price and people buying it as quickly as it comes on the market forever. So same thing here. If there were real existential threats associated with Bitcoin and a computer,
if you understand fundamental mining like I do, though, that's already been done. Nobody wants to pay for power when you're mining Bitcoin. Everyone knows that power costs money. And so mining Bitcoin, where do you mine Bitcoin? You mine it at the cheapest power source. What's the cheapest power source? Excess energy. Flare off gases, like stuff that is going into the atmosphere for no purpose. So using it for Bitcoin mining is a better purpose. It's a commodity that would be lost anyways. And so we're already, I don't know what percentage, but let's call it 80% there. Like, this isn't the old days where everybody had computers plugged in their basement mining Bitcoin. It just doesn't work like that anymore, and nor will it ever, because it's not profitable. You're just throwing money down the tube. So there's no economic benefit to it. You're doing it just for the education, which I encourage you to do. You'll fall in love with it, but you're not going to make any money on it, right? Those days are over.
Yeah. And I mean, we're not the only ones sitting here. So you guys might be like, oh, well, who are y'all, saying this? I mean, Ray Dalio just said the other day, he just said, let me see here exactly. He said he prefers investing in hard money like Bitcoin and gold over debt assets, given rising global indebtedness. And so that was a speech that he was giving over the Abu Dhabi Finance Week conference. And he says, it's impossible for these countries to be able to not have a debt crisis in the years ahead that will lead to a great decline of monetary value. So, again, here he is now, Ray, and Ray has not been on the Bitcoin train, for 15 years. He was a kind of a detractor of it until more recently. So, I mean, this kind of goes to the things we keep saying here, this particular episode, which is, you have the way people thought and you have the way people are starting to think now. And the people that are finally starting to think now are doing nothing other than thinking the way the believers like us and many of y'all listening in have been thinking for a while now. So, I mean, it's good to see that kind of notoriety coming up from somebody like that, from Goldman Sachs saying, yeah, we're going to do this. from Ray Dalio saying, hey, listen, I prefer to, invest in gold and Bitcoin. Soon he'll just be saying Bitcoin. But anyway, we'll leave that out. But this is, if you guys aren't paying attention, this is crazy. Like was said earlier, 5 years ago, 7 years ago, if we heard one of these things in a single year, we'd be like, oh my God.
Yeah, right.
We hear it multiple times a week now.
Well, and I can tell you that we've also said multiple times in, cycle pasts, if we could only make Bitcoin easy to use, if we could only make it not stressful to transfer, they've done that. That we've got an answer to our prayer here. They've made it as easy as just checking your brokerage statement next month, and they're taking care of the seed phrases. They're taking care of the 10-minute transfer time periods. They're taking care of all of the complexities that, in my opinion, number one, is too advanced to ask the masses to educate themselves through.
Yeah.
And it's too risky for it poses. Can you imagine a world, and this is not going to be a popular opinion amongst some of my peers, but can you imagine a world, how hard it is? Have you ever watched those scam calls on YouTube where the elderly are being taken advantage of, like on 2020, where somebody is calling in and telling them, can you imagine how easy it would be to steal someone's seeds phrase if that was in the hands of everyone? It would be happening and there's no recourse.
Yep.
It's final. You send your Bitcoin, you give your seed phrase. I've even watched, how easy it is to get your stuff stolen in the crypto community. There's a well-known crypto guy, been in it forever. He was on a live stream just like this. He had his seed phrase on one of the windows and he literally closed it out. Someone was recording it. He couldn't get the money out fast enough. It was gone in a nanosecond. And so, you take that level of sophistication against the average level of protection or intelligence pertaining to blockchain, and it's a recipe for disaster. So you really have to sit back at a global level and go, how will everyone participate that doesn't create more headache and only creates a huge percentage of value in their life?
Yeah.
We're talking about that. These are the rails that they're setting up right now, and whether you like it or not, they're a hell of a lot easier to use than the ways of the old.
Yeah, definitely.
We work with at our firm, Arch Public, we work with high net worth, ultra high net worth folks that use our products, and I can tell you without question, the thing they value most beyond the performance of our products is ease of use.
Yeah.
What am I going to have to do? What am I going to have to do anything? Am I going to have to?
Well, it's all about people like to understand it simply, and and people like to understand exactly what the steps are that they're required. And there's so many gotchas in the crypto space, it's insane. That you don't learn until you do. Try sending. There's been, I can remember probably a long time ago, I sent crypto to an exchange, and they had a general wallet that then you had to put a note in to tell them which account to segregate it to. And the money just vanished. It was just gone. And it took 2 months to get them to release it into. And so you can't have that type of clunkiness at a global level. I mean, come on.
Yeah.
Now it's all going to be managed, between the banks like fiat is. And we engage with them for yield purposes, for liquidity purposes, all of the things that we're doing right now.
It's the reason why I bring up what our customers want, and that's ease of use, and then how easy is this going to be? And we spent nearly 5 years making it as easy as possible. But that's the reason why we've seen enormous movement beyond performance, beyond some of the narrative. Bitcoin is digital gold, blah blah blah. It frankly is the truth associated with the Bitcoin ETFs, and the scale that's gone into those products it's just simple and easy. Now imagine you have another, other levels of products which are just as easy, but they have yield associated with them. There's an arbitrage opportunity where you're not even having to commit to a buy and hold position. You've got, an option type of position that has an end date on it. And if you just hold it to that end date, you're going to get a certain amount of yield. Again, that's another level of ease of use associated with performance. And so, it's obvious that we've gone from, the first inning to the third inning to the fifth inning, with Bitcoin in the hive mind of pop culture, Bitcoin in the hive mind of traditional finance, and then the ability for people to have access to it, which is just very, very simple.
Yeah.
The on-ramps and the off-ramps have to be the way everybody does things now. It's much, you can't teach people a bunch of new stuff.
Well, see, and a lot of what we've got going on are things that I've been talking about myself, my own public streams that I, would do every week, or at one time, twice a day, every day. But, a few years back, I mentioned, listen, we were still trading for Bitcoin, right? I mean, that was the de facto. You traded for more Bitcoin. And that was a good life. That was a good life. You traded your alts against Bitcoin to make more Bitcoin to increase your stack. That was a great life, because there weren't very many on-roads, and the on-roads weren't very easy. The on-ramps and the off-ramps.
No, they were difficult. It was weird trying to use a decentralized exchange where you've got that, and I've been in it for a long time, and Tillman and I would talk back and forth about, okay, we want to do this and we want to do that. And there were like 12 different steps, and it was insane. I mean, it was just, it's crazy. No normal person, no normal human being that has a normal life and isn't somehow a borderline obsessed with crypto would want anything to do with that. Would want anything to do with it. Be like, this is weird. This is crazy. I'm not doing this.
Well, and we still have that reek. And Grant Cardone posted something on Twitter today that said, "Why is it so expensive to buy Bitcoin on exchanges?" Now, I want you to think about that statement. I'll tell you why it's so expensive. Because of those days. It's where we're not living under the standards of the real world. We're living under the standards of a new frontier. And those don't exist at the same time for very long. And because competition will drive it to a commodity pricing model, and commodity pricing models are favorable to the consumer. Yeah, right. So we're going to see the cost come down. But even this is a beef I have. I mean, think about it. Coinbase is the largest on-ramp to crypto. They're the largest exchange, globally. And you go on their app, and if you want to buy Bitcoin, you have to know to go into the settings and turn on the advanced feature if you don't want to absolutely get Disney World gouged. You know what I mean? And you're just going like, why? Why put a bad taste in Grant Cardone's mouth when he's probably wanting to buy a bunch of Bitcoin? That's not good for and so we need to hold ourselves to the standards of the traditional finance space. Like, what is a normal exchange charge? And one of the things, not to promote exchanges, but that's the first conversation I have with exchanges. Like, what do y'all charge as a basis point? And I think Gemini, I think, is like 40 basis points for their pro, and I think you can get that at Coinbase. But why have the games? Why have the fiery hoops and the alligator pits to get to the right price?
Because they can for the moment, just like you said, because they can for the moment. But as you said, that's nothing that's going to last, right? This is the great thing about competition. Competition is going to drive down those prices. There's just no two ways about it. Now, some people get out there and say, oh, well, if we have these little features and whatever, maybe we don't have to compete so hard on price. But at the end of the day, when you have competition, price goes down, and price dropping is good for you, me, and the other consumers out there. And so, man, I'm waiting for that day, man. We get that pricing competition really coming in.
It's best for here's what it does. It's a welcome handshake in for the new people versus what Andrew just described, where you're going, what Mickey Mouse world did we just enter? A bag of peanuts is $19. What? And you're just going, this doesn't make sense.
Yeah.
I can walk 5 feet across the street and get them for $2.50.
Well, there are clear. There's a clear direction over the next 3 to 5 years of the disruption associated with some things in banking, right? So stable coins are the disruptive force. And the reason why they're going to be a disruptive force is fairly simple. Everything in banking and in finance, the curve associated with cost really begins to flatten once it begins to move in that direction. It's like commissions on a traditional exchange, whether it's Fidelity, Schwab, E-Trade, TD Ameritrade, which are all kind of owned by just a couple of places now, TradeStation, whatever it happens to be. The flattening out of commissions, and then Robinhood took it to another level, and zero commissions, right? So commissions associated with traditional markets is so low that it's hardly worth mentioning anymore. Well, the same thing will happen in terms of the movement of money over the next 3 to 5 years. So stable coins, I think, in the Trump administration will be adopted in a very significant way. And so instead of sending a wire transfer that not only costs you money in and out,
Yep.
But is fairly, it's a fairly kind of involved process. Most people have to go to the bank, got to fill out paperwork. That paperwork's got to be approved by a manager. You might even get asked some questions about it. And then it goes out and maybe it gets there 2 to 3 hours later. Well, stablecoins remove all of that in a bunch of different ways. The costs almost down to zero. Timing, depending on where you're moving the money, can be instant to obviously less than an hour.
Yeah.
And you're not having to, sign off on a document that says whatever it's going to say. You're not having to talk to a manager. You're not having to get approvals. It's just bam, 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 bam. And so crypto as a disruption, I think that's where it comes in terms of banking and traditional finance. The other thing that I thought was meaningful, I saw a headline.
Can I pause on that point for a second, Andrew? And because the question that's really wise. I guess the question that begs in my mind is, Tether obviously has the strongest ties to the US dollar in terms of its value, right? All this talk about CBDCs, wouldn't it be better to just nationalize Tether? It's finding all of its value in the US dollar anyways. And then you adopt that technology. Like, it even begs the question, like, what would XRP's value be between banks if Tether's there as the quote CBDC US dollar equivalent that's approved by the US government and used for that purpose?
So I think globally Tether is and will be that, and as economies of scale in banking move in this direction towards stable coins, the global standard will be Tether. And I think the national standard here in the United States, and this is a very, very simple answer that if you take 5 minutes to take a look at, it's going to be USDC. Like there's just no question about it, because Coinbase is absolutely a knighted entity. They have an ongoing and deep relationship with USDC and Circle. Circle just did a deal with Binance. These are So when the SEC went after basically everybody, the DOJ went after everybody over a 2-year span, guess who didn't get a Wells notice? Circle and USDC, right? Mm-hmm. So nationally, again, because Coinbase is, an approved entity in some of the areas where law enforcement would have an interest in and be able to shut things down or stop the movement of progress. Those two entities nationally are favored, and then internationally, Tether is protected and favored. So I think that's where that goes. Will there be others that will fight for market share, like the Ripple?
I was waiting for you to say Ripple stablecoin.
Well, it begs the question, right? Because I think Ripple, by even doing that stable coin, is acknowledging what I'm suggesting right now, which is like, why do you need a settlement token if you have a cash equivalent token that's adopted by the government? That seems more logical to me than but one, we will see. But it seems pretty probable and exciting that that's already kind of in the works, and that mechanism is not something that we're going to be sitting around a year from now scratching our head on, going, I wonder who's going to take center stage on this and be kind of the monopoly driver. And it sounds like we've got two basically appointed
we have, again, the next 4 years is just this really, really wide open space. And by the way, more comments from Trump just yesterday that if you invest $1 billion in some way, shape, or form as a company here in the United States to build something, the road is going to be completely open to you. Like all the regulations, all that stuff, we're going to clear that out, right? Now you want to talk about, I don't know what analogy to use here, but people are going to be running as fast as they can down that road. And by the way, crypto has a lot of money, right? Got a lot of money to do that stuff. So I then come back to the fact that I whether I saw a post or whether it was an article or something, but Trump and people around him, by the way, they're all still speaking at like Bitcoin magazine events. There was a Bitcoin magazine event overseas this week, and Eric Trump was one of the important speakers there. So they're following the price. My guess is, and this was the point of the post or the article, is that Trump wants to see Bitcoin at 150 as quickly as possible, right? So, I've said this so many times on this show that there are no downside risks associated with Bitcoin that are meaningful. The only one I see that I think is a realistic, short-term issue is tax-based selling coming into the year / into tax season. Yeah. Other than that, there's just not a meaningful downside risk associated when you have so many different constituents rooting for and expecting movement in a particular direction. So whether it's stable coins and the rise of their use and integration into the banking system, whether it's
this reminds me of the analogy. I lived in Nashville for a long time, and Nashville was kind of a sleepy little country western town when I moved there. It wasn't what everyone knows Nashville is to be today. Okay. But there were precursors to kind of figure out that Nashville was headed in that direction. One of the ones I remember 15, 20 years ago, Nissan moved their headquarters to right outside Nashville, Tennessee, built this $1 billion, I don't know how much it cost, but massive facility, and basically cut a deal with the Tennessee Valley Authority for their electric rates. And they moved it, and it was a huge, huge deal. Like everybody was kind of scratching their head like, I wonder why they chose, Franklin, Tennessee. Yeah, exactly. But then it was like a domino effect. Every single month for a solid 2 years, you were hearing about big companies moving their headquarters to Nashville. Well, then you're looking at downtown skyscrapes or cityscapes, and you're going, holy cow, there's cranes all over the city, and people are building taller and taller. And then you hear Four Seasons is building a hotel / condominium downtown where the top penthouse just sold for $13 million. To deny Nashville's growth is to ignore all of those precursor events. It's kind of the same with Bitcoin. Like there's cranes in the city of Bitcoin. There's big companies moving into the city of Bitcoin. There's lots of movers and shakers talking about the city of Bitcoin, and to think that that's not going to get more residents to move to the city of Bitcoin, I've never seen that happen in any other way than what I just described. It's a natural course of events. It's a
And I was wondering if you were going to get an analogy out today. Every week you come up with some crazy analogy. And we were kind of cutting it close on time here. I was wondering if you were going to come up with one this week. So, Bitcoin City and cranes, guys, bringing new people into Bitcoin City. So there's your analogy this week. But yeah, I mean, again, at the end of the day, I think, especially just last few weeks, I think it's just more of what we continue to say week after week on here, which is you ain't seen nothing yet. You've got more and more of these large, influential people and companies and whatnot coming out, on the Bitcoin side of it. And, the odds are they've probably been doing their thing in secret on the side for the last year or whatever. It is what it is. Nobody comes out here and says, oh, I got this influence. Guess what? Today I decided, and they haven't, understanding that they had that kind of influence and they haven't, already been into it. But I don't know. I still get people talking. People are scared. They're like, man, God, I don't know. I don't remember any Bitcoin cycle where, I've been in since January 2017, where we've heard people so many times ask, oh my God, is this the top? Oh my God, this is the top, right? And people are genuinely scared to get in, which is pretty scary because, Andrew put it out there earlier, really the only, short-term risk associated with this is, selling out to pay taxes here over the next few months.
No, I disagree.
But even with that, just zoom out a few years. What is it, like every 4 years, right? If you can zoom out 4 years, you haven't lost. It's always gone up, right? And so,
if you bought at the top of every cycle, the last 3 cycles, you've made wild amounts of money.
Listen, it's about who's buying and why they're buying. In days past, in 2017, who was buying Bitcoin?
Me.
Yeah, but who? What? Why? And why?
No,
it was
that's
a bunch
exactly
of Joe
my point.
Blows.
That's exactly my point.
It was a bunch of us. You know what I'm saying? And why were we buying? We were buying for the multiplier. We were buying to see the rocket ship take off and to try to time it, and then to pat our ego in terms of how smart we were in terms of timing the top. That's why we were all in it. And the ones who timed it the best have added themselves up for the last 7 years. The point I'm making is that you've got a new class of buyers in the equation now, and they're not buying for speculative upside. They're buying to hedge against their downside. That's a different. That's no different than me saying to you, Chris, you're a billionaire. You all of your fortune is tied up in a manufacturing facility that produces Tabasco sauce. You're privately held. No one knows how much money you have, but it's billions of dollars, and you're the Tabasco king. Real story. What's your biggest risk? You're not selling. What's your risk? Your factory burning to the ground and your 20-year supply burning with it, and you not being able to wake up and sell Tabasco tomorrow. What's the value of the insurance policy that I'm going to sell you that makes sure that if all that happens to you, you're still a billionaire? And what will you pay me for that insurance policy? That's where people are with Bitcoin. They're not thinking about the price increase. They're thinking about their factory burning down. And this is an insurance policy against them being able to sell Tabasco tomorrow, is essentially.
So by the way, are we at the top? I forgot about a not all that meaningful amount of Bitcoin I purchased on September 10th. You want to know what the price of Bitcoin was on September 10th?
You're going to tell us.
57,500.
57,500.
That was 3 months ago. 3 months ago, right? So are we at the top? Nobody knows. There's always tops, and there's always lulls, and there's always lack of movement in the price. But at the same time, if you have a 3 to 5 year time horizon, You'd just be a fool to not be involved.
It'd be crazy not to.
Yeah, stop looking at cycles of 6 months and start looking, like Andrew said, at 4-year cycles.
Yeah.
And you almost, like, I don't know if you can miss, but it's real. You'd have to be real unlucky.
Yeah, absolutely. I mean, I think it's a great place to leave it here today, guys. I mean, again, I think if you're retail and you're coming in and you're worried, oh my God, I'm not going to make a 50x over the next year on Bitcoin, so I'm not going to buy it. You're missing the reason why you actually need to be buying Bitcoin today. If you're out there talking about, oh, the government keeps printing all this money, oh, this is going out there, and you're not buying Bitcoin, you need to be buying Bitcoin. You've got a disconnect between what you're recognizing and how to protect yourself against it. And I think we all kind of believe that. I think this is what we're all looking at. That's why we're getting the big players coming in now. Now that it starts making a little sense, $100,000, get up to $150,000, $200,000 is going to make a lot more sense to larger entities and whatnot who have a lot of cash that they have to put somewhere. Well, it doesn't make a lot of sense below 100,000. Above 100,000, it starts making sense. And then again, don't think for a second that these you've got big, important companies with leaders in their companies that have been around for decades and very smart themselves, but don't think for a second they aren't paying attention to what, what's going on at JP Morgan, that they're not paying attention to what Ray Dalio is saying. These are the influencers of the influencers, right? These are the king influencers, I guess you could say. And what's his name over there at BlackRock?
Larry Fink.
There we go.
Well, the fact that we've found ourselves as a hidden part of the NASDAQ is going to prove to pay off in spades. People are going to notice their involvement in Bitcoin because you can't help but notice it. It stands out as an outlier against every other performance, that you can look at. So if you look at now, MicroStrategy being adopted at the NASDAQ, well, what happens if the NASDAQ now starts outperforming wildly the Dow Jones Industrial? What do you think's next? Some companies inside the Dow are going to start going, hey, we probably should, probably need some of this liquidity that this NASDAQ product has produced.
Yeah, and also you get strong tech effect across everything, right?
Yeah, it's not just the NASDAQ either. It's the NASDAQ 100. They're being added to the NASDAQ 100. So, that
it's going to stand out.
Yeah, that's an even bigger effect of money managers having to index to that. And so they're forced to buy it based on their, the protocols inside of their own firms, right? So, yeah.
Yep, definitely. As always, gentlemen, I use the term loosely here, you know that. Especially, well, I'm going to continue to use the term loosely until Tillman agrees that he is not a fashion maven. That this was he seems to think he is. Y'all, hey, listen, guys, comment below. Curved bill, Gen X, or the straight bill nonsense that Tillman's got over there. You guys let me know what you think. We're gonna get a real quick understanding of who our audience is here.
Okay, so let me pose the question a little different so that I don't have to play on your playing field. You don't need home field advantage if you really trust the argument. The question is, hat that fits your fat head or hat that doesn't fit your fat head? That's the only question. And the flat bills fit the fat head, okay? So that's why I buy the flat bills. And
so it's out of convenience then.
No, it's out of the respect for my head. Like, I'm not going to fit in a head that
I think we should
to a
concede the point,
pound guy.
Chris, we should concede the point to Tillman that he's got a fat head, so he needs a different captain. We should concede the point.
Let me ask you a question. Do I go into a shoe store and say, hey, can I have the shoe that fits the 180-pound guy? No, I don't, because I don't have a 180-pound foot. I don't have a 180-pound head either, okay? So, get with the program. I'm buying according to my stature. That's prudent. In fact, I think you guys should take a note out of my playbook, because from what I can tell, those hats don't fit.
Oh.
Here's a footnote to the show today. Tillman was voted worst dressed on his college football team. So I'll just
I
leave that
was.
there.
I was trying to adjust, but it was by design. I didn't like to talk to the press after the games, so I posed as a homeless person coming out of the locker room so they wouldn't want to talk
And
to
that's
me.
his story, and he's sticking to it.
Good.
Hey, guys, we really appreciate y'all joining in with us. Hopefully you've had a good time. Again, it's more than just about information and our thoughts and news and all this kind of stuff here. We like to give you a little bit of entertainment, and I hope we do. I don't know. I think we mesh really well together. I think we do a good thing here. Let us know what you guys think. Do me a favor. Share the link. Hit the thumbs up. Like it. Subscribe to the channel. Follow us. You can follow Andrew at AP_abacus. And you can follow Tillman at TexasOL61. I'll say it. Yeah, look at that. I can get it right all the time now.
Hey, listen, I'm expecting it now. You've done it 2 shows in a row.
You can follow me at TXWest Capital. All there on Twitter, X, whatever you guys want to call it. It's pretty much where we do most of our social media. But if you do follow me on other places, Facebook, Twitch, those kind of places, Instagram, you do get the updates for when the shows come out as well. So we'll be back again next week. Let me see. What's next week, guys? What was the 18th?
Mm-hmm.
Let me see here. So it looks like, because I ain't working on Christmas, just so you guys know ahead of time, I ain't working on Christmas.
You
So
call
we'll
this
see you
work,
guys.
Chris? Come on, man. This is not work. It
is fun. It is fun. So we'll be here on the 18th. And then, I don't know if these guys can handle coming back on January 1st would be the next one. These guys might have hangovers. I don't drink, so.
I don't either.
Andrew's quiet about it.
He's on mute.
Oh, he's on mute. Oh, okay.
No, I absolutely don't drink. So I don't know. It'd be up to what we want to do. But yeah.
Well, we'll definitely be here next week, the 18th, guys. I don't know that we'll be here on Christmas. We all got families and stuff, but who knows? Maybe you get a short show, a little something or other. I don't even know if you guys would want to watch it. You'll probably be enjoying your time off anyway.
Right.
But then we'll be back again on the 1st.
Let's do it as just a test of loyalty, and let's give away something on that day just to reward the people who come to the show.
On the 25th?
On New Year's Day, we're not doing the 25th. We're not doing
No. New Year's Day. New Year's Day. That's 1 out of 2. We did half of the holidays.
All right. Well, let's figure it out this week, and then we'll let them know next week on the 18th when we have the show, and then we'll see who shows up on January 1st. To kick in the new year with Beards and Bitcoin.
Well, you'll have hats that fit you because that's what I'm getting both of you for Christmas. Find it in the mail. It'll be a signature required package.
Signature, make sure we got it, right?
Yeah, that's right. No plausible deniability.
Oh, man. Such a great time. All right. Listen, guys. Hey, listen, y'all out there, as always, remember the only thing you control is how much you lose. So, however you choose to approach the market, just keep working on your risk management is the absolute one thing that's going to have the biggest effect on, how successful you're going to be over time, right? Because if you lose everything up at the beginning, no matter how you're doing it, what are you going to do, right? You're gone, you're out. So make sure you're working on that. Other than that, follow these guys, check out their company, archpublic.com, check out our company, TexasWestCapital.com. And I'm telling you guys, listen, I don't shill anybody else's products ever, right? These guys, man, I'm telling you. Even if you're a trader, I am a trader, but I always tell you guys, keep an extra bag of Bitcoin just sitting over it you don't touch. These guys have a new product, their Bitcoin algo, that you can go in there and use, and it's going to effectively DCA in a way that you don't have to think about it, the smartest way possible. And so if you're looking to, instead of just putting money in the bag, putting it in the bag intelligently, check them out.
And to Chris's point, there's no amount of words we can sit here. We could spend an hour telling you all the features that we've built into it. We've offered it for free for 3 months. So go to the website, sign up, try it. If you like it, tell us how much you like it. If you don't like it and want to see another feature set added, let us know what that is, and we'll try to add it. So yeah, we're all about customer feedback.
So it's archpublic.com, guys. And like I said, you can check us out at TexasWestCapital.com as well. I hope you guys have an amazing week. Trade safe, invest safe, make more money to put into Bitcoin. And man, oh man, I guess we will see y'all next week, 18th.
See you guys.
Take care, everybody.